Great. All right. Welcome again to our workshop on the nonprofit audit. We're so glad to have you all here. Before we get going, a few announcements. We want to let you know that we have lots of programs coming up. September 28th, we have a connections call for members at 9:30. That is a Zoom call. Anyone who's a member, we get on a Zoom like this and people say, hey, I'm struggling with this. How did you answer that? Does anybody have funding for this? Whatever is on your mind, we are collegial, we're helpful, and we usually have some pretty good discussions. We have a new group, our own consultants connection call, which is November 2nd at 9 a.m., also at noon. And that's just targeted for consultants. And we are helpful and supportive of one another. If you're new, how do I do a contract? What do I do? How do I get business? Anything that comes up, we're here for you. If you're more experienced, Jill runs a fabulous consultants group. She invited me in. It's national last Monday. So the more we can support each other, the better. We, along with ADO, a local development organization, we are cooperating with them on their Meet the Experts program, which is October 12th, in person at Sam's of Gedney Way, and Maureen Wave and Deborah Wave, two people on our program committee and board members, are going to be talking about 3 things to make your grant proposal stand out. And there'll be other experts on hand as well. And people go from table to table and take in a lot and ask a lot of questions. Our next webinar will be December 1st on ethical grant management. Lauren is from the organization whose CEO will be there, along with Westchester's Director of Youth, the Youth Bureau, Dr. Damia Harris-Madden. So we'll talk about getting the grant, keeping the grant, managing the grant, and making sure they don't take it away. I want to remind everyone, if you're not a member, we'd love for you to be a member. We're a nice group of people. If you join us, you get all of our past recordings and resources that are posted on our website, and programs are free. So we encourage you to do that. And you can apply if you paid for today. I can give you a code and you can apply that towards our very modest $85 membership. Our board will turn over in January. We're looking for a treasurer, or if you're interested in just joining us in any capacity, please shoot me a note in the chat, or you can email us. I'll put the email in the chat if you want to contact us. I'm getting through it. Let's see. We want to thank our sponsors, Legal Service of Hudson Valley and Choice Words. And now the main course, the main entree. I am so thrilled to have Beth Zolkind. She's a good friend of mine. She is retired as the CFO of the Robin Hood Foundation, and she loved to give this talk to program officers at the foundation, the people who reviewed the grants and wanted to see what's going on in those nonprofits. What is their financial health really like? She's a CPA. She's been a controller for a foundation. She's done nonprofit audits. I should also tell you the other very important things. She's a master knitter and sourdough baker. So if these things interest you, we can connect you as well. For today, if you have a question, she does want to make it interactive, but I encourage you to use the reaction and then the raised hand, and she'll see your hand raised. And if not, or if you have other questions that you want, put them in the chat, and some of us will be monitoring the chat and we can lift those questions up. Lastly, I just ask that you stay on mute. If you're not mute now, would you kindly mute? And without any further ado, Beth, I'm so very glad you are here. And I need to share, I need to make you a co-host, which I will do right now. Okay. there. All right.
Great. Well, thank you, Allison. It was a very nice introduction and really nice to meet all of you and to be here. As Allison said, I recently retired from the Robin Hood Foundation, where I was the CFO for 13 years. And a lot of what I did beyond being CFO is I did a lot of education. I taught program team, developed donors, fundraising team, because I really believe that the financials of an organization tell your story. And the numbers are the language of your business, and everybody in the business needs to know to speak the language of the business. So I was very much of an ambassador for our numbers, and I'll probably refer to Robin Hood as us because it's been only a couple of years and I still think of it as us. So that's just going to come out. I don't know your backgrounds, and I imagine that there's a pretty broad range of financial sophistication in the group, between people that are pretty solid in understanding financials to people who really don't look at the financials and relate to granting organizations on a different plane. So I'm not sure exactly where to pitch the conversation. Please shoot questions constantly. Tell me to slow down. Ask me a question that's deeper than I'm going. I want to make it relevant for you, and only feedback is going to help me pitch this at the right direction. So to get started, Allison, I think, sent around the 2019 and 18 audited financials for the Robin Hood Foundation. We're using that one because it was the last year I was there. I know those numbers very well, so it's easy for me to talk to them. And Robin Hood is in some ways an unfair organization to use as an example because they are very liquid and very wealthy, and many of the organizations that you're working with are not. But on the other hand, they do a lot of interesting things that are not irrelevant to things that you might be seeing. So we're going to use that as an example. But before I put it up on the screen, let's talk about what is an audit report, what is an audit, how does it compare to financial statements, what are the elements of an audit report, why should I care? So an audited financial statements of an organization, to start with, will organize the information of that organization, financial information, over a fixed period, and do it in a way that it is comparable with prior years. So you have the balance sheet, which is a snapshot of what you have, what you owe, and what's left over on a day. The day after that balance sheet is written, it's out of date because the next day is different. But on that day, it tells you what you have, what you owe, and what's left over. What's left over is not yours in a not-for-profit. If it's your personal financial statement, what's left over is your wealth. It's your savings. It's the money that you have. That's your equity. If you're a for-profit, you might call it retained earnings. In a not-for-profit, it's simply considered your surplus. It's the excess of your assets over your liabilities, which ultimately is not yours. The world gives you money to do good with it, not to keep for yourself. That's a really important concept of not-for-profits. The statement of operations is for a period of time that ends on the same date the balance sheet was taken a picture of. And it talks about what you've earned, what you've spent, and what was left over that year. Again, that's the surplus for that year, which adds to your prior surpluses to give you the total surplus that you've got. That surplus is also called your net assets. So that's sort of the most wonky accounting I'm going to get, but you need to understand what financials are. Balance sheet is a picture of what you have, what you owe, and your leftovers on a day, and your revenue and expenses and surplus is what you've done during that year. There are two other statements. One of them is the cash flow, which is incredibly complicated to anybody that is not an accountant. But basically what the cash flow statement does is it takes all of that revenue and all of your balance sheet and it translates it to a cash basis. So that if you sold $1 million on December 30th and your year end was 31st, you might not have the cash, but you would recognize the revenue. The cash flow statement will make that adjustment so you can see what money you have in the bank and how it got there. That's what the cash flow statement does. And the second financial statement, which is really important, is called the functional allocation, which takes all of the expenses that you've had in the year and it breaks them down by the way you organize your business, program, management, fundraising, however many functions you organize your business, it spreads those expenses so you can really look under the hood of an organization. That's what financial statements are. Stop. Any questions? Anybody want me to go further? We're good? Okay. Oh, good. Okay. So that's what financial statements are. What's an audited financial statement? So depends upon the state regulations, but at a certain threshold of revenue for states, you must have a CPA look at those financial statements and express an opinion about them. And the opinion is going to say, in our opinion, these financials fairly present the financial statements of the organization. It never says, we swear there was no fraud. It never says, these are exact. It just says it fairly presents. But to get to that point, auditors will come into the organization physically or electronically and review a lot of transactions to get a handle on how much they can rely on what those financials say. And more importantly, and particularly if the organization is large enough to make it cost effective, the auditors will come in and test the internal controls of that organization. Because more than looking at every single detailed transaction to get comfort that the financials are good, you want to look at the process that gave rise to those transactions. Because if you believe there are internal controls in place that are sufficient to mitigate the risk of errors or irregularities happening, then you don't have to test every single transaction because you know the company has put processes into place to make those errors or irregularities unlikely. And as an auditor, you really want to see those internal controls in place. Sometimes for very small organizations, there are so few transactions, it makes more sense to test all the detail, look at the bank statements, look at the cash, look at the receivables, look at what the payables are. But for organizations of any reasonable size, auditors will come in and look at internal controls. And if management says, I want you to look at my internal controls, I want you to make recommendations, they'll focus on that. So stop there. Any questions on internal controls, on what the auditor's role with respect to that is? Okay. So the management letter is a letter that will accompany the audited financial statements, and it will be the auditor's response to their review of those internal controls. And they will look at controls over cash, controls over other liquid assets. They'll look over who's opening the mail, who's putting money in the bank. They'll look at revenue recording and who's booking revenue and what are the incentives. And they'll look at all of the elements relevant to the incentive and the opportunity to perpetrate a fraud. They won't ever say they are here to find fraud, but they're going to look at all of those opportunities to see what could make a fraud happen in this environment. And ideally, you would like to have a management letter that says no material weaknesses. That's money in the bank. That is something you can show to your donors. That's a piece of promotional material that should be blown up and stapled to the front door. It's really big, and particularly for smaller nonprofits, because it's hard to have sufficient internal controls to really mitigate risk. You need a few people to be able to separate responsibilities so that the control of the asset is not in the same hands as the control of the record. It takes a lot of prioritizing on the part of the executive team to make sure that those processes are put into place and are reviewed and are tested regularly. So that's a great thing for an organization to have. The financial statement opinion will not address that. The financial statement opinion will only address the reasonableness of the numbers. So that's my introduction. Everybody good so far? No questions on any of this stuff? Okay. So I am going to share.
I'm sorry, Beth, I have a quick question.
Go ahead.
Is there a revenue threshold just in general where the review of the internal controls would happen? I'm just trying to get a sense of size.
You know, I used to be an auditor in New Jersey, and the revenue thresholds in Jersey were different than in New York. And if you're receiving government money, it's different. If you are receiving government money, I really don't want to misspeak, because since I left public accounting, the numbers have changed. It's an easy Google question. In New York, I thought it was $750 for a limited review and more than that for an audit, but I can't tell you what those numbers are. And I know that they differ by state, and it differs if it's government funded or not. A government audit is called an A133. And their internal control review is a nightmare. It's a huge investigation. It's incredibly burdensome on an organization. But if you're going to be getting government money, you need to do the A133. And material findings on an A133 audit are significant because it's going to have a direct bearing on your ability to get that grant back.
In New York, less than 250 is an unaudited financial review. 250 to 1 million is you need to do a review, an audit.
Is it an audit or a review? I think it's just
file independent CPA review.
a review, right? So 250
Okay.
is a review in New York.
Okay.
Those numbers changed fairly recently. An
Yeah.
audit is different.
Right, a million, sorry, over a million file audited reports.
Is an audit. So a review does not have that opinion. A review is a much lighter touch on the part of the auditors. They will go in, they will largely rely on what you as management tell them. They do very, very little external testing, but they're held to a much lower standard. So they don't have to write an opinion about the financials. They simply have to say basically that everything adds up and the client gave me all of their books and they comply, there was no obstruction. And that is sufficient to accompany your 990 for New York State char purposes. Okay, so I'm going to share my screen. Let's hope this works. Okay, can you all see the financial statements? It's up there. Okay, so this is Robinhood's 2019 and 2018 audited financial statements. There's supplementary information in there, and there's the report of independent accountants. That's the audit opinion. That's what the report is called. That's what the opinion is called. So your table of contents, and here's the audit opinion. Grant Thornton is the auditors. And they basically say, and it's funny, over the years that I've been in public accounting, this opinion has gotten weaker and weaker and weaker. It used to be auditors took a lot of responsibility for what they did. Now there's a significant paragraph about the fact that these are not our books. These are management books. Management's responsible for them. We can express an opinion. We do not discover fraud. They have obviously had more than their share of lawsuits to make sure that this opinion is something that they can support. But at the end of the day, recognizing that the financial statements belong to management and that their job is to evaluate the appropriateness of accounting policies and the reasonableness of estimates, they will say, in our opinion, in all material respects, the financial position, that's your balance sheet, and the changes in net assets and cash flows are presented fairly. Presented fairly is what you want. If you don't get that, you have an exception. It's called an exception. And that's problematic and is a giant red flag. If you ever see an exception in an audit opinion, it's not something to ignore. You want to know why they could not give you a clean opinion. What are they having a problem with? It could be that you have stood firm on your receivables and you have said every one of these dollars is going to come in. We are sure we're going to collect them. And the auditors have looked at it and said, you know, They're 120 to 300 days old. You refuse to discount them. We don't think that your estimate is reasonable. We have no basis to believe this is coming in. And so they may say, except for the valuation of this receivable, the financials are presented fairly. But if you see an except for, or you see subject to the realization of this very dicey asset that we're not really sure they're going to realize, if you see a subject to, you want to stop and really plumb those questions, because auditors are paid by management. They're hired by the board, but they're paid by management. So for an auditor to go out on a limb and make an exception or a subject to, they're jeopardizing a client relationship. So clearly it has risen to a level that they cannot allow themselves in good professional conscience to issue a clean opinion. It's a giant red flag. So that's the audit. And then the supplemental information, a not-for-profit can put anything they want into their audited financial statements. It's not just what's dictated by the auditors. They can put a whole lot of extra information in, and depending upon what management wants to pay for, it could be subjected to audit procedures, or it could be in there as supplemental material. So in Robinhood's case, they make $150+ million a year in grants. And they want to show every single one of those grants as a line item in a supplement. And so the auditors don't audit the daylights out of that schedule. It's like 7 pages of single tiny type, but the total agrees to the total grants that are on the financial statements. And they're prepared to accept that this detail is what we are presenting. And in total, it agrees with the financials. But that's an important thing also for organizations to know. If there's something you've done that you really want to crow about to a funder, you want to take the opportunity to get it into the financials, to explain it in such a way that it gets some attention. This is very good advertising because it's got like a good housekeeping seal of approval. The fact that it's been audited and that there's an audit opinion, it has a certain patina of fact as opposed to puffery. And therefore you can put information in there, not that's puffery, but that expands on what would be the basic financial information so that you get to really shine a light on the things that matter to you about your organization. So we do a lot of that in these financials because we didn't have PR. And so we used our audit report for PR. So the first financial statement you get to, oh, and please stop me, just I can't really see anything. So if I'm talking too fast, just raise a hand or butt in. So the first financial statement is the balance sheet. In a not-for-profit world, it's called the statement of financial position. And these are annual financials. So you're going to see the year 2019 compared with the year 2018. Financial statements are much more valuable when they're shown in a comparative way. A number by itself is really hard to value. You must see it in context. So knowing nothing about Robinhood, if you look at it, you go, my, they're wealthy. You've got $333 million on your balance sheet right there. You got $333 billion in assets. What are they made up of? There's 3 numbers that matter on this audit. You've got cash, you've got pledges, and you've got investments. That's all that matters. And if you look at the pledges, you've got a ton more pledges than you have cash. Now, one thing you know is that even though the name is foundation, Robinhood is a public charity. The lawyer who set this company up in 1988, when this company was set up, she reserved the name foundation because she thought at some point Robinhood might want to become a foundation and not be a private charity, and she wanted the name to be available. So they put foundation in the title, but it's a public charity. There's a ton of public fundraising. And because it's a December 31st year end, you know that cash came in at the end of the year. So when you see $33 million of cash, that's probably the highest cash that ever exists on this balance sheet because it's year end and it's a public charity and people are getting their donations in at the very end of the year. And so that's the most cash they've ever got. There's that number. Pledges receivable, that's a ton of pledges, and it's up from the prior year, and cash is down. And investments are pretty high. $200 million of investments, primarily limited partnerships. Basically, it's all hedge funds. Robinhood was founded by Paul Tudor Jones, who was a hedge fund guy, and he founded it with 3 other hedge fund friends of his. And the board is more than half hedge funds, and the bulk of the money that comes in is from the hedge fund and finance community. So the only investments that Robinhood has is in hedge funds, with the exception of one cash fund. So that's what the assets are. Liabilities, not much, just grants payable. Just grants. Short-term accounts payable, relative to everything else, that's a tiny number. That you can't get too worried about what that number is. And given how much cash you've got, you know that there's no problem with accounts payable. They've got all the cash, they could pay it. These are things you want to look at in audits. When you've got a huge accounts payable number and not too much cash, what you know is that this company is using their balance sheet to fund operations. That sentence means that they're stretching out their payables to hold onto the cash to pay expenses that need to be paid. And you watch that. And when you see receivables ballooning in a situation like this, you begin to wonder, how good are those receivables? Who are they from? How old are they? Right? These are numbers that are very frequently used to manage an operation, stretching out your payables, trying to bring in your receivables, and watching your cash, because you've got to make payroll and you've got to pay rent. And so that cash is going to be used to do that. And everything else is going to come second.
How would we know if they're stretching out? If they're stretching out to pay liabilities, how would we see that?
Well, we'll get to the cash flow statement and see if
Okay.
we can start seeing it. But you begin to see numbers really growing, and you see cash being low. So you start to ask questions, right? We'll get over there next, the next page. But this is the assets, 365 million. 68 is all that we've got for liabilities. So there's a big surplus this year, right? 365 over 68, right? You've almost got 300 million in surplus. So this is the cumulative wealth of Robinhood at this point, December 31st, 2019. And always, assets are going to be equal to your liabilities and your net assets. But a more meaningful statement is, here's your assets, take away your liabilities, and that's your net assets. Here's your net assets, 297. 297 and 68 is going to give you your 365. It's going to balance. Did I confuse anybody? I went fast 3 different ways with that. Okay. So this is the kind of net assets Robinhood has. Robinhood has a lot of assets. Let's start down here, where they've received money from donors who tell us what we can do with it. And that's with a donor restriction. And either they are for things that we can spend it on, that's purpose restricted, or maybe they gave a multi-year grant and said you get 1 million this year, and next year's another million, and next year's another million. That's a timing restriction. So there's timing restrictions and there's purpose restrictions. They're both restrictions, and Robinhood does not have discretion over how and when that money is spent. That money is determined by the donors. We just execute. The other type of money is without donor restrictions. But a lot of time you have the board that says what you can do with it. So the board isn't a donor, but they said about $61 million, you can only do it, you can only spend money on these activities. So the board is another party that can restrict the spending. The difference between board restrictions and donor restrictions is, if you need the money to pay rent, the board can have a vote and say, okay, we are not going to restrict money to the census initiative anymore. We're going to use that money to pay rent and to pay salaries. So the board can restrict and the board can unrestrict. Donors can do that too, but it's way harder to get back to your donor to talk to them about the program that they wanted funding and why you want them to not fund that program, but to fund something else. We've done it. They will do it, but it's obviously politically more complicated and operationally less good. So the board can restrict assets as well, but they're considered without donor restrictions because the board is not a donor. And then the balance of those net assets is residual without donor restrictions. So out of almost $300 million of net assets, there's only 74 million that is truly at the discretion of management. The rest has been called for, has been declared. So it's important to look at that when you want to understand how much financial flexibility an organization has. You really would like to see their net assets broken down in this level of detail. Or if it isn't, you want to ask them for this level of detail. And that's a legitimate question. How much true wealth do you have? What availability do you have for future spending at your own discretion? Okay, good. Should we move on? Okay.
Beth, if there's a time restriction, so you get $3 million to use over 3 years, do you count that 3 million as an asset?
The $3 million counts as revenue in the year that you got it.
Okay.
And are you telling me you got the funding for it or you just got a pledge? Did you get the cash? Did they say, here is $3 million, you can spend it over 3 years? Or did they say, we are pledging $3 million and we will give you $1 million a year? Which scenario?
The former. They
gave $3 million.
Yeah.
So you are you got the cash. So you're going to put your $3 million in cash, right?
Okay.
And you have $3 million in revenue, but the revenue is going to show up as timing restricted. So maybe the first $1 million is allowable this year and the 2 are in the future years, or depending upon what the donor's intent was, the full 3 million is restricted and is to be recognized as revenue in future years.
Okay,
Right?
thank you.
Okay. So that's the balance sheet. And again, total net assets are 297, and we're going to see that number on the next financial statement. So this is the statement of activities, also called the P&L, if you're going to be very shorthanded about it, also called revenue and expenses. This is the revenue page. And as you see, we have revenue that is without donor restrictions and revenue that is with donor restrictions. And in 2019, the revenue that we received was broken down between contributions, donated services, and events. Then you get down to other kinds of revenue. We'll talk about that afterwards. So contributions is going to be, here is $102 million. We're giving you 39 million to use this year, and 63 million get to be used in some restricted way, either for specific purposes or in future years. It shows up over there. Donated services are typically our law firm doesn't charge us, and they will provide us work all year long, and they send us a statement at the end of the year. The value of the pro bono services we provided to you was $177,000, and we record that as both revenue and expense. It's a donation.
Just wanted to test. Can anyone hear me? You can.
Yes. It looks like Beth maybe has left and maybe she'll try to re-enter. Is that the case?
Everything did freeze.
Allison, are you still here too? Might be a host and co-host thing.
Interesting.
Yeah, it looked like to
We're
me
all
Allison froze as well when Beth froze.
Well, if the meeting ends somehow in their attempt to get back in, let's just all come back in.
Yes. I was following along with my organization's financials and I found it to be really helpful. I don't know if you guys were able to do that.
I was doing the same with a organization I know very closely, so.
Okay, I'm leaving.
Do you want to text Allison or Beth to see what their story is?
Yeah, I'm just about to text Allison.
I'm wondering, how bad are the storms up there? Could somebody have lost power? If Allison.
Where is she?
Westchester.
I'm in Westchester. It's okay.
It's
I don't
okay?
think Yeah, I don't think it's the storms, at least not here.
Just odd that we're all still here and Allison and Beth are gone.
They have to know, right? You don't think they're talking. The
That would
presentation's
be,
done.
No, we have to text them and tell them, you're not there.
I just texted Allison. Haven't heard back from her yet.
Maybe she
and I
lost
sent her an email.
internet connection.
That could be the issue because she's host.
Right.
This is great, though.
Yeah.
It's very good.
Yeah, it's really interesting what to look at. I'm really happy about this.
It takes the fear away. It doesn't look as daunting when she talks about it.
Definitely understanding the numbers. And since Allison's been kind of pushing this idea and understanding this better, she said, if your organization or the organization that you're writing the grant for has a clean audit, you should include language on that in your grant application. And we have had clean audits for the past, I don't know how long, a long time, and without any,
Allison, it
messages
looks like
or
Allison's back.
Hello, everyone.
comments.
I
Oh,
just
hello.
I got a hold of Allison. Her power went out and that's why she lost connection. However, the power just came on, so they're attempting to log back in.
Oh
They
my-
apologize and hope everybody will just stay an extra minute or two.
Sure.
You, Lydia.
Thanks, Lydia.
I wonder
And
how widespread that is.
Hi, Allison.
Yeah, I'm gonna call Beth again. We live in the same neighborhood. Unbelievable. I can't believe this. I'm gonna try calling her.
No worries.
So including the information on your grant, would you say it's important no matter who the funder is? Did she speak to that at all?
I would assume it is, just because knowing, that you're financially viable and, being clear with your finances. I mean, yes,
Everyone would be glad.
I feel like any funder would like to know that. What does everyone else think? I definitely think so.
I'm on the board of a foundation, and that's absolutely what we look at for sure. Analysis of the financials is definitely one big piece of it.
I've included it on, like when you have to put in a financial narrative, definitely if we have a clean audit, mention that in that character count, whatever it is, right?
And are you talking like federal grants or state grants? Or are you talking like foundational?
Both.
Just
I mean,
any.
I've had banks that have asked for that financial narrative. I've had-
Mhm. I just never thought to add it in. And since Allison mentioned it, a few months ago, I just started doing it, and, who knows? It can't hurt, right?
Can't
And you
hurt.
got every single grant. It's the secret sauce.
Could really especially be useful for organizations that are fairly new. If you've got an audit, you're doing a good job, you show you've got these processes in place, it indicates a level of commitment and the kind of standards that will lead to sustainability. So I think it's really important.
On the flip side, if you don't have a good audit, it doesn't look good. So that sort of justifies why you would want to put in the
Right.
positive.
But they're gonna see it, even, if you don't have a good audit, they're gonna see it, I'm telling you, they're gonna see it and they're gonna ask you a question about it.
And do you feel like it's better to,
The comparative between the years is important too, because they look at that. If something was an issue in one year, but then they pulled out of it, in terms of a loss or something, the next year they have a plan, that's another conversation to have, but it shows that, they had that plan and they accomplished it.
and would you expect an explanation of something like that in the financial narrative before you even ask?
I think it depends on the application,
Mhm.
what questions are on the application, if you, yeah, it depends on what the questions are, whether I would directly answer that or not, or wait for the conversation. And what is it, a private foundation, is it a family foundation? I mean, it really depends on how close you are to.
And what your relationship is, right? Right. Great.
Hi all, I'm back. I'm so sorry about that. I'm gonna reshare again. Let me see, I think it's screen. Okay.
Just to fill you in, Beth, we were just talking about when to include, your clean audits and what your organization does to sort of show the funders that you have these audits that are, either without auditors' messages or notes or not, and how we portray that and how it's a good idea if you do have these clean audits to say that. So that's where we were just discussing without you.
So I would share with you the way that we do it at Robinhood is when we would have a funder that was very interested in joining. And we got past the point of introductions and they're now prepared to learn about us and maybe express an interest in going on a site visit, which we did a lot of. At that point in the conversation, when we're putting together material about who we are, we always put an audit report in that material. It should come out fairly early on that we're proud of our finances, we're proud of our clean opinions and our clean management letters, and we want to dispel any concerns about that at the very onset so that any interests that you have in the organization are going to be program related and there's not going to be any reserve about, well, what are they going to do with our money? So we generally used it fairly early on as because we were proud of it and because we thought that it would just get us past a whole lot of questions. So I will continue. I'm just going to go share my screen now, I think. Share. Screen 2, share it. Okay. And I think you guys can all see it.
Mhm.
Okay, so I'm going to go back to the P&L. I'm really sorry for that. The internet here has been unstable really ever since the pandemic. It's like, I'm not sure what it is. Anyway, so we were on the P&L, we were on the revenue, the statement of activities. We were talking about the second main section of revenue that Robinhood has, which is fundraising revenue. And their events are expensive. They have an annual fundraiser every May that runs over $10 million. That's the full cost of putting that event on. It's at the Javits Center. 4,000 people show up and first-rate talent. It's a whole big event and it costs a lot of money and it raises a lot of money. But this is an interesting thing to know. And when you're looking at other funders, we know our events are expensive and we know that we need to show a lot of money. I can't tell you how many people that give money to Robinhood every year say, I'm going to give it to you in connection with the fundraiser. So that it's very nice for us to always show that our fundraising revenue is enormous. And it's been up as high as 100 million, but it's always significantly more than the cost of events. It was a signature activity. We were never going to bring it to anything more modest, but every rating organization, GuideStar, Better Business Bureau, any of them that look at our fundraising numbers know that we raise a lot of money in association with spending a lot of money. And so we know to encourage donors, if you're going to give us $250,000, why don't you buy a $250,000 table and we will put you someplace special. So there's a lot of manipulation that's legal, that's legitimate, but that you should understand, because most organizations do not make money on their fundraisers. They think they're going to make money on their fundraisers, but most organizations do not make money on their fundraisers. It's not a great way to raise money. It costs a lot. It uses a lot of people. And most organizations can't do it at a large enough level to make it really worth that effort. That's been our experience with all of our grantees. And they always are saying to us, oh, you have such an expensive fundraiser and you make so much money. Show us how to do it. So, well, it helps if your donor base are hedge fund guys. That's the first thing, right? Because other than those people, nobody is writing checks of that size. And so it's going to cost you a minimum for dinner. It's going to cost you a minimum for rent. It's cost you a minimum for talent. And you look at your donor base, you're not getting $1 million checks. So that was a lot of guidance we would give our donors, our grantees. Anyway, that's the fundraising. And then the rest of it is financial, interest and income, and then realized and unrealized gains on investments. So this last piece of it, net assets released from restrictions. Remember, this is the with donor restrictions column. What this means is during the course of the year, we spent $63 million of money that had been given to us by donors, either because the timing was now permissible to spend it, or because the purpose for which they gave it to us has now been able to be spent. So if we were supporting a particular childcare program, expenses were being incurred for that program that we could fund with this restricted donation. So all expenses are considered unrestricted. So in order to pay those expenses, we've got to move money over to the unrestricted line. So this simply means during the course of the year, we spent $63 million of restricted money consistent with the way the donor wanted us to spend it. So we got it into the unrestricted line so it could line up and pay for the expenses.
There is a question, what does unrealized gains on investment mean?
So unrealized gains on investments are very simply, if you have money in the stock market and the stock market went higher, and say you put $100 in and now the stock market's at 120, you have an unrealized gain of $20. But until you sell that stock, it's just unrealized. So if you have money in the stock market at 100 and now the stock market's gone down and you have $80 and you sell it, you have a realized loss, but it's not realized until you sell it. Until you sell it, it's unrealized. Make sense?
Yep.
Okay. So this is just all of our gains, realized and unrealized. So this is the expense side. This expense side is inscrutable in my mind. What you can tell is we spent 100 million on grants and we have some salaries and a little bit of overhead, but you can't really tell what we spent our money on. The way you really tell what the expenses of an organization are in this schedule. This I find the most interesting schedule in an audit. Do I need to make this a little bigger? It looks like it got small a bit. Is that better? Can you guys see that? So these are all the expenses of the organization, 138,394,000, and you can see 138,394,000 are expenses. Where's my expenses? 138,394,000. Better be the same number. Okay, those are the expenses. This is what we spent our money on. 109 million on grants. They were classified in 3 categories out of just historical. Robin Hood spent a ton of money on 9/11 relief. They managed all the relief fund money. The state gave them that to do. And this used to be $50 million. It's now down to nothing. There's very little money, but we're still making relief grants. This is a capital grant. The bulk of our money is just considered core, $108 million. Last year was $170 million. A lot of stuff went on last year. Other than grant making, $109 million in grants, $30 million in everything else. So clearly grants are the big kahuna in that operation. 20 million is salaries. And then the rest of it is like nothing, right? A little bit of consulting fees, a little bit of rent, a little bit of overhead. It's a grant making organization and they spend the money making grants. And when you look at the 20 million in salaries, half of them are the program team. Fundraising and management make up the other half. And when you see $6 million of overhead, of salaries for 14 million of direct expenses for an event, you know that most of that event has been outsourced because of the proportion of expenses. And this is management, this is the executive
We're
branch.
not hearing you.
Oh gosh,
Can
did
you
I become
repeat that?
soft?
We're not hearing you. Yeah.
Did I become, can you hear me now?
I can hear you.
Yes.
I can hear you.
Okay, I don't know what happened if I became soft. Let me get a little closer to the mic.
Can you just repeat, Beth, what you said about the proportion of the expenses, just that last?
Okay, so from the beginning, you have 109 million in grants and 30 million in overhead. So clearly the bulk of the operation is in the grant making. And of all 30 million in expenses, non-grant expenses, 20 million is in salaries and benefits. That is the bulk of what's going on at Robin Hood. And then you've got a little bit of consulting fees and a little bit of rent, virtually nothing else. And of all of the salaries, half of them are in the program team, which is what you would expect, given that that is the bulk of the operation. The program team is reviewing all of the grantees. They're looking at all of their operations. They're comparing them to every other not-for-profit in the city that could be funded instead, and writing reports and doing a ton of work. So that's half of the operations. The other half is between fundraising and overhead. And it's important, the president, the head of Robin Hood, makes a lot of money. And his salary is actually allocated between grant making, fundraising, and pure overhead because his job is allocated that way. So it's important when you look at an organization, they've got nothing or very little in the way of fundraising expenses. There's something problematic if they have fundraisers. Somebody is doing that work. And so you want to see if there is a lot of event activity or fundraising activity or donor outreach activity, you want to see salaries in that function. And salaries can often be allocated between multiple functions. Accounting stays in management in general, but the office of the CEO should rightfully be allocated between fundraising, program, and overhead. Does that make sense? And so then just a point that often comes up about ratios of overhead and things like that. I find, and I think the world has gotten a whole lot more cognizant of this, that there used to be a lot of pressure on nonprofits to keep their overhead numbers down. And I think over the years since I've been at Robin Hood, there's been a lot more sophistication in the world out there in terms of looking at financials to understand that you've got to have infrastructure to do a good job as a not-for-profit, and infrastructure relies heavily on compensating people to do the work. So a bigger problem than too much of an overhead factor, to my mind, is insufficient overhead factor. I think you're in a much greater chance of having accounting problems, of having poor grant making, of not having a good fundraising operation if you haven't staffed for it. I think you are far more likely to err on the side of problems with an insufficient overhead factor than you are with too much. And you can always reel in your overhead factor if you find that your benefits have gotten out of control, or you've built in raises that are way too much and they've taken on a life of their own. At some point, you've got control of that. But it's very hard to hire good people. And when you get people to do a job that needs to get done, you've got to make sure that you can hang on to them. So that's P&L. This is a very hard, the cash flow statement is hard for non-accountants to really understand. There's a lot of non-intuitive or anti-intuitive, counterintuitive activity going on here. So I'm not going to spend a lot of time on it at all. I'm just going to say what this does is it takes your P&L, which is on an accrual basis, segue, accrual. Accrual means you record your revenue in the period that it's earned, and you pay and you record your expenses in the period they're incurred. So if I made a deal on December 30th for $1 million, I book that revenue in this year because I've earned it, even though I don't get the cash till next year. And if I owe rent in December, but I don't pay it till January, I record the expense in December because I've incurred the expense. What the cash flow statement does is it undoes all that. It says, I only want to know where your cash is. What cash did you get in? What cash left the house? Where is your cash? And this is really important because at the end of the day, that's the way you're running your business. You've got to have cash. So this was a year in which Robinhood showed a surplus of $27 million in change in net assets and ended the year with $33 million in cash. So the cash was actually higher, but they lost $29 million during the year from cash. So we started with 62 million and we used 29 million of cash during the year. How did we use the cash? Well, starting from the bottom, we bought and sold investments, pretty much the same thing over there, bought and sold investments. Really, we lost the cash in operations. Well, where did we lose the cash in operations? Well, we paid down some grants. So my grants payable number went down. If your payable number goes down, it's because you spent the money to pay off your liability. But our receivables went up. If you increase your receivables, it means people owed you money and you didn't collect it. Our receivables went up $22 million. And a whole lot of that profit was an unrealized gain. It wasn't cash, so we had to get that out of the number. So what you can look at, and you could say, okay, we had a lot of cash, $62 million. We could afford it. We paid a bunch of grantees, and we allowed a lot of pledges to stretch out. So the way that pledges will stretch out is if people give you multi-year pledges and they don't fund them right up front. You'll end up bloating your pledges. It's not necessarily a problem. In an entity that's got a problem with cash, it can be a problem. Why are the pledges growing? Why are the pledges stretching out? That's probably enough on that. It's a complicated statement. So that's it for the top. We call them the tops, the financial statements, the balance sheet, the P&L, the cash flow statement, the functional allocation. Anything more on that with the opinion? Okay, so I'm going to walk through the notes.
There was a question that about what all we can count in overhead and to what degree salaries and benefits are part of overhead. They are. Yeah.
Salaries and benefits are overhead.
Right.
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 Salaries and benefits are overhead. The difference is when you are an operating foundation. If you are an operating entity and you are providing direct service, the compensation of those people who are doing the direct service is not overhead, that's program, right? Otherwise, if you are a grant-making organization, all of this is your overhead, right? And I would argue the direct cost of events is also your overhead. Okay. Did I answer that? Was that okay? So here are so a lot of the notes to financials are boilerplate. The auditors will tell you what you can include, and you have to do that. There's certain required communications. But note one is your opportunity to say who you are. And our note one goes on and on. We had a very long note one because we wanted to use it as a way to get people to read who we are, what we do, why we exist, and what do we most care to fund. So you do it as succinctly as you can at the top. Robinhood finds, funds, and creates programs that generate meaningful results for New York's poorest residents, period, one sentence. That's what they do. It's not just grant making. There's a lot of other stuff that goes into partnerships and other things, but it all gets captured in that line of grant making. But a lot of development of not-for-profits in the city that are focused on fighting poverty. And 200 people, 200 entities. And this is an important statement about Robinhood. 100% of all donations from the public go directly to fighting poverty. That was a giant selling point, and that's become out in the world a much more frequently seen thing where the board will cover the overhead and donors will fund the grants. And if you have that situation, then you want to trumpet it because it makes donors feel that their dollars are being used 100% effectively for the work that the organization is doing. Not fully understanding that that work wouldn't get done if the overhead wasn't there, but it's easier to do that funded by board if you have a board that can do that. These are all the different things that they do. So that's an interesting one, and that's worth spending a lot of time crafting it and thinking about it. Then this is accounting. How do you record yours? This is straight out of the accountants. You record your your P&L with donors restrictions, without restrictions. You've got investments. It goes right down the balance sheet. And these are just straight boilerplate things that the auditors say you have to have. Talk about your investments, talk about your cash. We talk about pledges. This is strictly required communications. Nothing unusual. It's wordy because we allow it to be wordy. That's another point that's really important. Management has a lot of control about what the auditors want written in your audit report. You can push back on things that you don't want said if you disagree with them, as long as they get to put the essential sentences that they are required through the AICPA or FASB. You can have extra words or a more succinct word. So we push back on a lot of stuff where I thought I wanted the language to focus one way, and I didn't think theirs did. We talk about event revenue. These are strict different things. Reclassifications, every time you do financials, you start organizing your stuff differently this year. So you've got to go back to last year and reorganize it so it lines up. You've got to disclose that you've done that. And then this is just all boilerplate. This is a new one, liquidity. This came out of 2007 and 2008, where there was so many cash problems as a result of the credit defaults. And what they look at is they see how much actual cash exists how much liquidity exists to fund operations. And our standard is that we budget cash to ensure that there's always enough liquidity available to fund at least the following quarter. And in most cases, it's 2 quarters. Remember, I said at the beginning, most of the cash comes in December at the end of the year. So we will forecast out a whole year based upon the cash at that moment, because we get a little bit more cash in connection with the event. But really, any pledge that's going to get paid, any money that's coming in, starts coming in around Halloween and then just pours in until the end of December, which means the cash that you start the year with is the cash that you've got. And you've got to budget it through the year to make sure that you can make it till that 4th quarter when you start collecting your pledges again. So this is just an analysis of the balance sheet that talks about how you actually have cash. And they conclude that we have $250 million available in financial assets that can become liquid should we need them within a year. These are the pledges, and half of them, we have this huge pledge receivable, half of them are coming in within the year, and the other half are pledges that are due in future years. So this pledge number within the year That is because a lot of the pledges are made at the end of the year as well, as Robinhood is pushing to get their numbers so they can report the largest fundraising number possible. A lot of people will say at the end of the year, okay, I'm going to pledge $10 million and I'll give it to you when I have a liquidity event in May. And that will show up in that number. And then here's the investments. These are all the hedge funds that Robinhood is invested in at that point. And you can see there's a significant unrealized gain in these numbers, significant unrealized gain. And this is the cash fund, which is basically a dollar. And then none of these funds are managed by Robinhood board members. It used to be that Robinhood had a lot of money with their board members. And then in 2007, Senator Grassley came down on us and said, you cannot have your board getting carried interest and paying capital gains tax on their income and taking gigantic deductions for donations to Robinhood. And he was right. So we divested of all of the investments that were managed by our board, and they just give us cash. So there was that. And then fixed assets is meaningless. And the grants payable is what it is. It's always fairly consistent. $119 million made it out towards grantees. And what you find, and you find this in a lot of nonprofits, there's a lot of conflicts of interest. So people that are on Robinhood's board are also on the boards of many of our grantees. And many Robinhood staff members are also on boards of our grantees. Rather than thinking of it as a negative, we think of it as a tremendous positive, that board members are deeply knowledgeable about the programs which we are funding. They won't vote when we're making a decision to vote on a grant. They will abstain, they'll step out. But it's really helpful to have them on those boards, that they are able to bring that perspective to program committee meetings. And it's really helpful for Robinhood staff to be on the boards of our grantees, especially long-term grantees, because you have the ability to affect change both from the grant making side as well as from the board side. So this is something that we've always liked.
I see one year you had 16 million in grants, the year before 71 million. That's a pretty big jump.
Yeah. So I was going to skip this really quickly because it's really complicated. But
all right, then don't.
It's okay. In a nutshell, we fund very heavily to a lot of charter schools, significant funder for charter schools in New York City. One of them is Uncommon Schools and another one is KIPP. And Robinhood built two high schools, one in the Bronx, which is where KIPP is headquartered, for the KIPP schools. Knowledge is power something. And the other in Brooklyn for Uncommon, which is where they were headquartered. And in the course of building these high schools, which cost about $100 million each, a very complicated financial transaction took place involving new market tax credits. And it was very complicated. It involved multiple financial entities and required us to carry a receivable on our books for 7 years that was non-existent, but it was required as a part of this complex financial transaction. And in 2018, we were able to write off the last of those receivables. So this is a non-transaction that related to one of the high schools that we built, which is why it shows up there, which is also why grants in 2018 are so much higher than in 2017. It includes the write-off of that financial transaction. They're not doing new market tax credits anymore because they were way too complicated. So we shouldn't spend any more time on it. It just is what it was, and it's over. This is the donated stuff. We talked about legal services, and we get donated stuff for the event. People always donate all the swag at the events. And then there's something that we included that is not a footnote. We call it facilitated donations. Robinhood has relationships with lots of legal firms and consulting firms and all kinds of firms throughout the city, and we would put them in touch with grantees to provide pro bono services to our grantee. And we capture that on our financials. It's not on our books. It doesn't rise to the threshold of being a donation to Robinhood and an expense to a grantee, but we recognize that we provided $1.5 million worth of facilitated legal support, going to Simpson Thatcher or another law firm saying, would you please help this guy? And they would do it because we asked. And we thought, we're tooting our own horn here. In addition to all the grants that we make, we got $3 million of services for our grantees. A lot of people don't do that. I recommend that you do. Why not? It shows the world you are bigger than you actually are. In terms of dollars, your reach is greater. So that was that. And then this is the whole story about the high schools. It's very complicated, but really interesting. And at the end of the day, we got 2 high schools built. And these 2 huge, outstanding charter networks never had a high school, and they've got high schools now, and they've graduated kids. The kids are doing great. But this is that new market tax credit write-off over there. That's that same number over there. And then taxes, and we have retirement plan. And this is all about the net assets. These are the donor restricted. These are all the different programs we had where donors said, I will give you money for this program or this program or this program. And there's more about those programs. These are all different funds and programs that we had. And then you find out at the end of the day, all that money, 44% of it comes from 4 people, right? It's very heavily concentrated, which has always been a problem at Robinhood. Tremendous concentration at the top. I think we figured something like 85 or 90% of all money came from 50 people in the whole organization. So very concentrated. And there's that. And then what you have here is just a detailed listing of every program that was funded. And then most of it is core grants. There's something we call management assistance grants, which is rather than just giving you a grant for whatever specific thing we are funding, management assistance grants would be that we are going to give you a grant to hire somebody to search for a new executive director. So it's more operations oriented, and they're smaller in dollar. And it's specific, like you guys need to hire a fundraiser. Here's $15,000 to pay a headhunter to find you a fundraiser. Be like that. But in the actual grant, there might be a salary for that fundraiser. So we may give you the MA grant to pay for the headhunter. So those are grants. And I think that is it. And those are all the grants. So that's that. That's the story. What else? Any questions? Anything else that came out of all of this? Is there anything I didn't hit on? No? Okay. Well, if you think of anything or back when
there's a question in the chat. If contributions are so concentrated, how do you address this in a public support test? Or do the amounts make it a moot point?
I mean, this is a 990 issue, but I'm just curious.
You know what? It's really interesting. We do that public support test. And when you actually do the public support test, because it's over time, 75% of Robinhood's money will come from the public despite this concentration. And it's complicated to explain why that works, but the public support test is not of a moment. It's a 5-year average, and it's not always the same people. So it ends up working out. It's been consistently 73 to 76% of money has come from the public, despite that concentration.
Thank you.
And
the 990, by the way, is out there on GuideStar. It's totally available.
How Elizabeth Kendall asks, how does total revenues and support line up with the statement of functional, I guess, functional expenses, you mean?
Sure. So let me share again for 1 sec. Do that. If I bring myself up to here is, it won't line up with revenue because remember, it's only expenses. But if you-
Is everybody seeing sharing?
Can you guys see the share? Oh, I'm sorry. Hang on. I forgot to hit share. Sorry. Okay. Can you guys see it now? Okay. It will not line up with revenue, obviously, because functional expenses is only the expense side. But if you look over here, so total expenses are 138.4, right? 138.4. And total grants are 108.8. Those are two numbers. We can 109 and 138. So then you go down to the functional expenses, and there's your 109 in grants, and here's your 138.4. They line up exactly. And if you look at total salaries, compensation for grant making is 10.3. Let's go back up here. Compensation for grant making, where's my grant making salaries? So it's 14.7, which is 10.3, and there's your 14.7, and includes the overhead. So there's your 14.7 in your grant making expenses. Public information is 8.8, and there's your public information 8.8. So the P&L will give you the expenses in a summary fashion, but the functional shows you what they're really made up of.
Thank you. Any other questions? So I think for some people, oh, this was a lot. So if people want to more of their own audits, they can go to their treasurer. Yes, they can go to the board treasurer. They can go to if there's a CFO for more help. Any other thoughts if people are wanting to get a little more clarity when they look at their own organization audits?
Also, I'm happy to talk to anybody that if you have questions later or offline, or just want me to look at one of your own financials. I really enjoy this stuff. And I'm in the for-profit world right now, so I feel like a little bit of a traitor to my cause. So I'd be happy to just get back into nonprofits a little bit. And if you have questions or stuff comes up, shoot me an email. I'm happy, or a call. I'm happy to chat.
Do you want to put your email in the chat, or do you want me to? She's frozen again.
Let me see if I can do that. Here's chat, and I can
Just type it in.
Okay.
What should we be saying if we see 2 years of deficits?
It depends on what the reserves are. It depends on why there are deficits. It depends on if it's a cash deficit or not a cash deficit. It depends on what the receivables are and what's coming down the pike in terms of liquidity. There's, a number is not just a number. It's got to be contextualized by the story.
I think that's the main takeaway. There's more, you got to dig deep. You got to search a little and try to figure things out.
Totally.
So we're a little over, but thank you so much, Beth. Everyone, I'm so sorry that we've lost internet for a few minutes there.
Thank you.
I hope this
really
was
fun.
helpful. Beth, did you put in your, yes, she put in her email if you have questions, and she said she'd be willing to look at your audit as well and help you, but go to your treasurer, your financial advisors for your organizations and learn more about your organization. Any other comments before you wrap up for today?
Can I ask you, if you do email me, in the subject line, would you put like audit talk or something, just so that I know who's reaching out to me, because I won't remember everybody's name. And I want to make sure that I know who's reaching. So put audit talk or something that I'll know.
All right. Thank you.
Thank you.
So
Thank you very
everyone
much.
for coming.
Thank you very much.
I hope this was helpful. We have a connections call September 28th, and stay warm, stay dry, stay healthy. Thank you so much.
Bye, thank you.
Bye.
Bye.
Bye-bye.
Thanks, everyone.
Bye, everybody.
Thank you.
Bye, bye, bye. Oh.